Good afternoon.
Hello and welcome to ИнстаФорекс Economic News TV channel with us, Ekaterina Stikhina
And Tahmina Salomova.
You are watching the combined currency and commodity market review for the previous week.
What tendencies prevailed in the Forex exchange market?
Without doubt, currency trading was extremely volatile last week amid the recent turmoil witnessed across financial market worldwide. Many traders took the chance to make a good profit.
And what developments triggered such roller coaster fluctuations?
The most significant event of the week was certainly the Brexit vote. The British pound tumbled by 10% to its lowest level since 1985 after the UK's decision to pull out of the European Union. The cable ended Friday's session at 1.3683 following a slight upward correction. The lowest mark hit by the sterling during the day was 1.3374. For the week, the British pound lost more than 800 pips. The Bank of England Governor McCarthy made it clear that the British regulator would not hesitate to take additional measures to support the domestic currency if necessary. The pound slump ignited global risk aversion as traders piled into safe haven currencies such as the Japanese yen and the Swiss franc. The franc skyrocketed to nearly one-year highs against the euro, whereas the yen touched its highest mark in more than 2 years. Demand for the safe haven yen was on the rise. On Friday, the US dollar dropped to 99 yen, putting in the largest one-day decline since late 1998. Over the week, the greenback fell against its Japanese counterpart by 2 yen 35 cents to settle at 101.99 levels. The single European currency, which is now going through a rough patch due to the impact of the Brexit vote on the Eurozone's economy, also edged lower against the US dollar. The euro-dollar pair closed Friday straight at 1.1121. During the session, the euro made a run towards March lows versus its American peer. The euro's overall weekly losses totaled 202 pips. The UK's exit from the European Union is one more reason for the Fed to delay a rate hike. Weaker than expected jobs growth in the United States observed in the past few months has already prompted Fed policymakers to hold the federal funds rate unchanged at the June meeting. A fresh batch of US statistics released on Friday indicated that orders for durable goods decreased by 2.2% in May, lodging a sharper drop than the anticipated slide of 0.5%. Durable goods orders, excluding the transportation category, were down by 0.3% in the previous month. That was all about the current trends in the foreign exchange market.
Thank you for the currency market overview, Tahmina.
You are welcome, Ekaterina. What assets did commodity investors put their money in during the past week?
Commodity floors across the globe displayed mixed tendencies as the outcome of the Brexit referendum was reverberating across all global financial markets. Crude oil futures were no exception as the prices fell sharply on Friday following Britain's surprise decision to leave the European Union. West Texas Intermediate futures for settlement in August were trading at $47.56 a barrel on the New York Mercantile Exchange, ending the week roughly unchanged compared to last Monday's open. Brent futures for August delivery also headed lower, reaching $48.41 per barrel. WTI dropped by 5.9%, while Brent set 4.9%, both benchmarks recording their largest intraday decline since February. Besides, gold prices surged to two-year highs on Friday as investors flocked into safe haven assets following the shocking results of the UK's vote. On the COMEX diversion of the New York Mercantile Exchange, gold contracts for August delivery were trading at $1,318.50 per 3 ounce, gaining 4.39% after an impressive rally to a peak of of $1,358.20. Gold posted its biggest one-day rise since September 2013 and hit their highest level since August 2014.
Ekaterina, thank you for the commodity market overview.
You're welcome, Tahmina.
You have been watching the weekly currency and commodity market review on ИнстаФорекс TV channel.
It was presented to you by us, Tahmina Salomova.
And Ekaterina Stikhina.
Have a great day. Goodbye.
See you.